Home Minister Amit Shah said buy before the 4th of June and stocks will shoot up. The External Affairs Minister S Jaishankar has said the resolve to invest in India is going to strengthen as these polls conclude. Now you have the addition of the Finance Minister Sitharaman, and she has said that there is no reason for all this volatility in the markets because Prime Minister Modi, she says, is coming back on the 4th of June. But the question is, what are investors thinking right now? Listen in.
Stability of government is the first criteria for markets to be efficient. Stability of government, stability of policy, particularly of taxation policy. Most investors who come to visit India today are keen to see where their money can be placed or parked. India's financial markets have far exceeded everybody's expectations in the recent past.
It's very clear where the election is going. The exact number people may have a debate. In democracy, they should be debating it also. But I'm very sure as round after round takes place, markets will be less and less volatile because the markets will see exactly what those numbers, or will get a sense of, where those numbers will end up. And I'm very confident those numbers will end up very, very good for us.
So after the Home Minister, now we've heard the External Affairs Minister and the Finance Minister talking about how they are sanguine about the continuity as far as this government is concerned. But are investors convinced? Well, there has been a lot of volatility in the markets in recent times, and the Finance Minister has spoken specifically about the volatility, and this was at an event. My colleague Ankur is joining us to put in context what the Finance Minister has said today, and he's here in the Mumbai newsroom. Ankur, if you can highlight for us what the Finance Minister has specifically said about this increased volatility in the markets and what could be of concern to investors right now in connection with the elections and the results.
Yes, important comments on stock market coming from Finance Minister Sitharaman on a question which was asked by ET Now. First of all, she gave a caveat that stock markets conduct on its own wisdom and direction. However, she mentions that there is absolutely no need to worry about the outcome of the election. She has also mentioned that financial market depend on stability and also do not want any kind of instability. Therefore, she says that absolutely there is no doubt that PM Modi is coming back in power, and therefore the volatility index, which is known as VIX, need not to fluctuate. You would have seen the volatility which has been there in the market in past few weeks, and now Finance Minister Sitharaman giving an important comment on the volatility of the stock market. About the divestment plans, she has clarified that there is no shifting on plan of divestment. Remember, there were announcements regarding IDBI Bank. There were also announcements regarding privatization of two public sector banks. However, the speed at which government is moving, there were few questions which was asked whether or not there is a change in the divestment plan. On that question, she has said that divestment decisions are approved by cabinet. Therefore, there is no going back on those decisions. However, she wants to ensure that in the process, the value is not lost from these institutions, and hence that focus will continue.
So that focus will continue. Ankur, of course, joining us from that event. But let's get perspective on what has been said by the Finance Minister specifically. And for that, market expert Ajay Bagga is with us. He, of course, the chairman of Elements platforms and always a good voice to get on the markets. Ajay, pleasure having you with us on India Tonight. Do tell us, in your understanding, for the kind of spike we've seen in the volatility in the markets, the fear index, the VIX, it's quite evident. What do you think is the reason? Would you say that this is about the uncertainty over the outcome of the elections? Because as far as the government is concerned, and we've heard three significant ministers talking about how the markets need to take a chill pill.
Yeah, Vikram, it's bound to happen with an electorate of the size of 98 crores, out of which one-third will make some noise or talk but will not go to vote. So about 63 crores will vote this year around, this election. As against last time, 2019, we had 91 crore electorate, out of which 60 crores voted. And I'm expecting about 62 to 63 crores to be voting. So any sample set is going to have some error margin. What is happening is there's abundant uncertainty on the outcome. And based on that, the markets have got volatile. Again, keep in mind that with respect to 2014 and 2019, when India VIX was north of 30, we have hit 20 now after 13 days of a very strong up move, and then today it was flattish to lower, but still above 20. It is still a one-third lower than what it was in 2019, which you can say was a wave election, and 2014, which was an uncertain election.
Real concern, is it about the size of the mandate that the BJP would get, or is the concern that the next government may not be formed by the BJP? Where exactly does it lie? Because, I mean, it could be either of these, right?
Yeah, anything is possible in a democracy, and you will get an idea on June 1st in the night when the exit polls come in. What happens is, Vikram, these exit polls are being done every day. And after every phase, especially, the exit polls are being conducted for that particular phase. So the data is there. Companies can commission it, institutional investors can commission it. I'm sure political parties also run their own exit polls, or these pollsters offer it to them. So I would say what the trends you are seeing in the market are probably reflecting the kind of results that are expected. And the upsurge that we saw today, post the Home Minister talking, and then today the EM and the FM both trying to talk up the markets, I think that is pointing towards efforts by the ruling party,
yes,
to kind of give the markets some kind of confidence.
But, you know, while Bernstein in their report is saying that it would take a lot more than just a drop in vote percentage for the BJP tally to be significantly dented for India Inc. to start factoring in a case of non-continuity. To you, how real is that fear playing out within industry and within the markets? Already we've seen FIIs pull out significantly from Indian investments, haven't they?
Yeah, but you know, I think the FII issue is more some amount of money going to China, and equal amount probably of lightening their exposure. So I think it's a more complex. It's more complex than just the government formation. I think after the December state elections, more or less, there was a consensus of political continuity. I think both sides, the government and the opposition, they have raised the discourse to such a heightened stridency and negative commentary, and you know, both claiming very high-pitched kind of outcomes. I think that is what is making the markets nervous, the FIs nervous. And one can understand, given the size of an Indian market, they can easily exit and come back. And I think that's what's happened. 29,000 crores has gone out in May itself in terms of the secondary market. Primary market, of course, there are some inflows. So overall, probably it's about 20,000 odd crores that's gone out of India per se. As against that, in June, there is a huge cachet of money coming in for the debt markets. So RBI will have a different issue in terms of not allowing the rupee to appreciate too fast in June.
Correct.
Whatever the complexion of the government.
That's
so
right.
I think...
yeah,
Vikram,
but Ajay, also about divestment, because the finance minister has spoken about this exclusively to us here on ET Now, and she has reiterated that there is no shifting of plan when it comes to the pipeline of divestment, and that it includes 2 banks and 1 general insurance company, and that the cabinet has approved. So the plans cannot be taken back. So as far as the finance minister's word on divestment goes too, how crucial is that for the markets to hear right now?
I think it was not needed. Bombay still has to vote on the 20th. What is the need to bring out policy issues right now, and a lot of the labor gets worried. I saw your capsule on that labor reforms and all will be put on. I think right now focus on winning the election, then making these grandiose statements which you have not been able to deliver on anyways. So I think right now is not the time, apart from what is in the party manifestos, which again, Vikram, about 3% is the impact of the party manifesto. So coming back to your earlier question, the Bernstein report, 45% is the swing vote, which decides in the last few days or on the date of the voting where they are going with. They have a very different kind of motivations, but 37% of the total votes cast are voting for the prime ministerial candidate. This was a 7 lakh strong sample size, a post poll analysis that was done in 2019. 37% will decide based on the prime ministerial candidate. 45% of the voters are swing voters. So you can actually say that's what Bernstein also wrote. If you see the worst performances, Congress would be 19%, BJP in 2004, 19%. That is probably the committed vote of both, and add on maybe 2-3% either ways. And the rest is a swing vote. A large portion is the swing vote. And that is what is difficult to call. Unlike in the US, if you see, 42-43% each are Biden and Trump.
Correct.
And there is a 8 to 10% middle, which will vote. So it's a swing vote
often in an election that really is the deciding factor. And in our case, we'll have to wait and watch. But I want to ask you about the Prime Minister's portfolio as well. In fact, upon his nomination in Varanasi, the Prime Minister has declared assets worth 3 crore rupees. Let's just understand the breakdown before I come to you to understand this portfolio better at a time that the government is trying so hard to tell everyone that, yes, you must stay invested in the markets. How's the Prime Minister's portfolio looking? Let's find out from my colleague Sumit. He's joining us with that information. Sumit, yes, disclosures have to be made at the time of filing of nomination. Now tell us exactly how the Prime Minister's portfolio is looking, what he has submitted at the time of filing his nomination in Varanasi today.
PM Modi filed his nomination from Varanasi today, and a candidate has to declare his assets. So as per the records, PM's assets are worth 3.02 crore rupees. And if we divide the assets, this includes gold worth 2.67 lakh rupees held in the form of 4 gold rings, national savings certificates worth 9.12 lakh rupees. PM also holds 2.85 crore rupees in bank fixed deposit as per the affidavit. So if we take the comparative figures, in 2019 and 2014, PM Modi's assets, they have shown an increase. In 2019, he declared assets worth 2.5 crore rupees, and also in 2014, it was 1.6 crore rupees. So that's how the assets of PM Modi's assets are there. It includes both movable and immovable property. So it has to be declared. That's why PM Modi has declared his assets today. Well, all the candidates who are contesting elections, they have to declare assets officially, and that's what has been done by PM Modi today as well.
Do weigh in on this, Ajay, because we're looking at the portfolio of the Prime Minister, and there is a big chunk in fixed deposits, but not so much in equities or bonds or mutual funds. What kind of a signal does that send out?
I think in a way of corporate governance, it's a good signal.
Right.
Unlike, the US Senate and the congressmen who sit on those select committees and then go and short the market before a COVID, or, go long on defense when they know a Ukraine package is going out. I think it's good that he stayed away from stocks in a governance sense. But if you look at the returns, Vikram, it's hardly 20% return in 5 years, and with having inflows. Of course, the Prime Minister is a very big philanthropist also. When he moved out from Gujarat, whatever was his chief minister's salary in Gujarat, he distributed it with the chief minister's staff. So probably he gives away his salary and this is just a portfolio return, but 20% return over 5 years, you are less than 4% CAGR, which kind of foots in to a fixed deposit heavy kind of a portfolio. So not ideal for you and me, and definitely for somebody age 74 post-retirement, not having any equity at all. I think it's a very inadequate portfolio. But what works for him is he will have a lifetime pension, he will have a house, and he will have a lot of other perks from the government, even when, as and when he decides to hang up his boots.
Very interesting, Ajay Bagga. We have in the past discussed so many personal finance portfolios, and when you look at the Prime Minister's, it has to be seen in association with the position he holds, and that's the interesting bit, because in terms of governance, like you pointed out, not having exposure to equities comes as part of the territory. We'll see exactly how it goes as far as the elections go and the volatility, and whether or not it can be controlled, especially after the finance minister has tried to allay fears. But that's for the future. Ajay Bagga, always a pleasure chatting with you. Thanks very much for joining us on India Tonight.